Welcome back to HODL, a crypto asset conference. My name is Shivani Agarwal and I will be your host for this session. Before we kickstart this session, I would like to thank our title partner, ZepPay and CoinDCX, powered by partner CoinSwitch, brought to you by partner BitPNS, Platinum partner Facebook, Gold partner Geotis, and Bronze partner Huawei Global. We're now moving on to our next session on crypto model regulation. I would like to introduce you to the moderator of this session, Mr. L. Viswanathan, partner Cyril Amarchand Mangaldas. Next, I would like to welcome the panelists, Mr. Naveen Surya, Advisory Board Member, Blockchain and Crypto Assets Council and Chairman Fintech Convergence Council. Mr. Tiwari, partner Cyril Amarchand Mangaldas. Mr. J. Ranganayakulu, former Executive Director and Legal Head, Securities and Exchange Board of India. Mr. B. Sriram, former DMD, SBI, and former MD and CEO, IDBI Bank, and Mr. Anand Sinha, former Deputy Governor, Reserve Bank of India. Over to you, Mr.
Viswanathan. Thank you, Shivani, and I'm looking forward to a very enriching discussion here, with the panel. Let me go straight to Mr. Anand Sinha to kick off the discussion. Sir, you have been a former, central bank regulator. We are already seeing the advent of fintech and the challenges that it is sort of posing to development of regulatory and supervisory capacity. What specific issues or challenges will introduction of or regulation of cryptocurrency bring to the table of the regulator? On one hand, it does seem to be inevitable that we'll have to deal with the digital evolution of currency in one way or the other. As wearing the hat of a central bank regulator, what are the challenges you see in regulation of digital assets? Over to you, Mr. Anand Sinha.
Thank you, Mr. Viswanathan. I hope I am audible.
Yes, sir.
Yes, sir.
Yeah. So as far as the advent of digital age is concerned, of course, digital transactions have already been there, have been there for a long time. But the difference is that both in terms of market structure as well as the settlement, the digital transactions so far, that is before the age of crypto, have been in fiat currencies. Now we are into a different age. So let me address the question in two segments. One is the advent of fintechs and big techs. That is one part of which poses challenges to dealing with the regulatory and supervisory aspects. And the second one is the advent of crypto, whether you call it cryptocurrency or whether you call it crypto assets. Now, the first one, fintech, and in particular, the advent of big tech, not so much in India, but abroad, particularly in China and some other countries. There, the challenge is that fintechs, because of their light-footedness, they don't have legacy issues. They can use the current hardware and software in much easier way than what the banks can manage because they have legacy systems. They have so many other advantages. They can be small in size and all that. So they are providing a stiff competition to the system, to the banking system. Or let me put it more broadly, to the incumbents, the banks, the NBFCs, etc. The advent of big tech poses a much more serious challenge because of the enormity of data that they possess. And they have what is known as a DNA loop. That is data, network, and activity. So they have such an overwhelming position that they can capture the market, they can create a lot of concentration, and therefore it has a lot of implication for financial stability. And therefore, how to deal with them? There is another aspect as far as big techs are concerned. It's a mixture of or mixing of commerce and banking, or commerce and financial services. Now, in particular, the mixture of banking and commercial activities is viewed very adversely in most parts of the world. So that is one set of challenge. Now, I obviously cannot go into details, but very briefly, I would say that much of that space is in unregulated domain. Slowly, certain things are coming into regulation. For example, in India, you have P2P lending, but it's only P2P lending which has been brought into regulation. There are so many other activities. As far as big techs are concerned, you have, as I said, mixture of commerce and uh, financial sector activities. Then you have the issues of competition and you have the issues of data protection. So it requires a very concerted effort in coordination with all these three authorities as well as international cooperation to deal with this aspect. So let me not go into specifics, but this is the broad outline. Now coming to the crypto side, there are much more serious problems in dealing with crypto. First of all, the regulatory evaluation of crypto, particularly the Bitcoin type, which is complete anonymity and unpermissioned DLT, distributed ledger technology. So the evaluation of this, I'll just read out from the latest annual economic review of BIS, Bank for International Settlements, which, as you know, is the international standard setting body. It says, by now it is clear that cryptocurrencies are speculative assets rather than money, and in many cases are used to facilitate money laundering, ransomware attacks, and other financial crimes. Bitcoin in particular has few redeeming public interest attributes when also considering its wasteful energy footprint. So this is the evaluation. There is a slightly better evaluation of what is known as stable coins. That is, you have Bitcoin and that kind of cryptocurrencies which have no backing of any asset, which are actually created in thin air. So if you go to stable coin which provide a backing, there also the evaluation is slightly better, but it is recognized that if it were to become large, it will have serious consequences for the financial system stability. And therefore, they have come out, the international standard setting bodies have come out with several high level principles as to how to deal with stable coins. And one thing is very certain, that they emphasize the need to regulate and supervise the stable coin segment very intensely. So broadly, this is where we are. Now, the point is that as far as the cryptocurrencies are concerned, I'm leaving aside the stable coin for the time being. As far as this aspect is concerned, one thing is very clear, and I am also of the same viewpoint. It cannot be treated as currency. But then, can it be treated as a digital asset? Probably yes. And if you treat it as a digital asset, then you have to address several other concerns which are there. For example, concerns about anonymity leading to KYC AML issues. The fact that the technology which is used today, the complete decentralized consensus mechanism, has its own pitfalls. There are possibilities of manipulation, and there have been incidents. So it's not that one is talking only theoretically. So, and the third thing is that in this completely decentralized atmosphere, as I said, manipulation is possible. Therefore, there is an alternative concept known as permitted DLT, which means you create a kind of central authority which is anathema to the Bitcoin kind of things that you have. So in a limited way, you still have distributed ledgers, but in a way you have somebody who is overseeing and who appoints trusted parties to do to make entries into the DLT. So I suppose that if some of these issues are addressed, then while inherently Bitcoin and other cryptocurrencies cannot be money, but they can be treated as digital assets, and perhaps one can deal with them.
Thank you very much, Mr. Sinha, for giving us a very clear perspective on the challenges which fintech and big tech is sort of putting on the table of the regulators, and at the same time giving a clear view on the boundary conditions between looking at currency, looking at digital assets, and even within digital assets, how could you form a view? How could you form a perspective on creating a safe mechanism to develop them? Thank you very much for that. I think given the distinction sort of you brought about between currency and digital assets and the type of assets, it may be an opportune moment for me to go to Mr. Ranga and given his experience and background, and ask the question to him, coming from his sort of perspective as a former securities regulator. How do you see this evolution, Mr. Ranga? Do you see this as as something which is sort of closer to the monetary authority, or do you see this more as a digital asset, which if is sort of traded and which is allowed to be used in the market, it raises concerns from a an exchange point of view in terms of what is it which an investor would need to look at, what kind of investor protection measures the regulator we need to sort of we need to consider, what kind of challenges this will bring to the securities regulator. Firstly, is it security or is it a monetary instrument? Maybe you could start with that, Mr.
Yes. I think Sinha Saab has clearly spelled out the risks in these assets. I agree that there are inherent risks, serious risks, which need to be addressed when these instruments are to be allowed for trading. See, these assets basically lack legal tender and not backed by assets. Further, anonymity, lack of transparency and potential misuse for illicit activity makes these assets vulnerable, very risky. And these risks cannot be compared with the traditional financial market instruments or securities traded today in the market. Due to evolving nature of business model surrounding these assets class, as well as complexity in underlying blockchain technology itself, a cautious approach is required and regulations shall be framed accordingly, in my view. Strict KYC, know your customer, and anti-money laundering measures are needed. These assets also enable people to hide their incomes and avoid taxation. In addition to, there are serious issues of manipulative, fraudulent, and unfair trade practices in the securities in these instruments. And your question whether this should be treated as a security, it all depends how this the bill which is pending before the parliament is going to take shape. As rightly, I think people have advocated that this can't be treated as a currency, but initially it was thought of as a currency substitute for currency. But now I think there is a unanimity that this can't be treated as a currency. Next, whether it can be treated as a security. Security definition is currently given in the Securities Contract Regulation Act 1956. It is a very exhaustive, inclusive definition, which also empowers the government to notify such other instruments as securities. But here, such other instruments means the principle of existendum generis will apply in law, and therefore you need to see whether this kind of asset will fall into those characteristics which are there, like shares, stocks, etc., which is doubtful, sir. Then going the other one, commodity, whether it can be declared as a commodity, that is also got its own inherent arguments and counter arguments. But ultimately, I think it can be given a standalone definition of a digital asset. So we need to just see, sir, how ultimately the parliament is going to take a final call about the definition.
Thank you, Mr. Ranganayakulu. I'd like to go back to Mr. Anand Sinha before I go to the other panelists for getting the industry perspective. Sir, you sort of very clearly articulated a potential path for regulation and how we can look at this class of assets. Now, two questions for you. One, I'm very mindful of the fact that we have two regulators in India who could potentially have jurisdiction over an asset like this. And you think we should use the opportunity now to create a unified regulatory framework for the digital assets, rather than have it being regulated by multiple regulators. That is sort of one question. And second, we also have the new IFSC authority, which is sort of trying to create a very enabling framework for financial investments, and for creation of a financial center within the legal sort of territory of India. Would that not allow us an island of opportunity where you actually have a unified authority who can look at everything? Could that potentially be an option for us to try a regime there, and based on the experience and success, then sort of open it up? Over to you, Mr. Anand.
Well, most probably you would not have asked the first question if we had a unified regulator, as has been advocated on many occasions. Both sides have their own pros and cons, and somehow we have chosen to stick to the current system that we have. And of course, its success depends upon coordination among various regulators. In my view, I don't really think you need a separate regulator, because the risks are very much similar to what you have for the which are there in the current financial system. You have risks to financial stability. You have risks on account of frauds, on account of terrorist financing, all that kind of thing. So if it is to be dealt with as an asset, as a security, SEBI is there. And the interaction of these assets with the rest of the financial system regulated by RBI is there. And of course, there has to be coordination. So I'm not a particular advocate of creating a separate regulator for this. Now, coming to your second question about the offshore segment that we have, to utilize that for the purpose of experimentation. Well, I would say that if we have to experiment, why don't we experiment inside our own system, where the regulations are much more, because after all, the IFSC has got a new regulator right now. As far as our domestic system is concerned, we have a long tradition of regulations. And therefore, if we have to experiment, and my personal view, as I stated in reply to your first question, that it is not a currency, it cannot be treated as a currency, it can be treated as a digital asset. And therefore, if we have to, and supposing, I mean, what shape the bill takes, we do not know. But if it does not prohibit these assets, then in that case, we can have small-scale experiments inside our own domestic domain. And of course, we can also simultaneously have in the other domain. I don't see any reason why we should do it outside and not do it inside. In fact, I would think that the better route is we have a greater handle on how it shapes up with long tradition of regulation and supervision, and then, if necessary, it goes to the other side. The other thing, the last point which I would like to make is, it may be worthwhile to try it in the other zone if it is banned in India. Because if it is banned in India, then the domestic economy cannot interact. So in that case, it becomes a completely foreign thing, which can be experimented with in that zone.
Thank you very much, Mr. Sinha. I think the key message from your remarks, as I take it, is that we have a more well-established and robust, system within the domestic market. And therefore, when you are experimenting on something like this, which could have a big impact, we have a better infrastructure and capability, supervisory and regulatory capability to deal with it. I think it sounds to, it sounds very, very stands to a lot of reason. also sort of like the idea that you're reminding us that both the regulators look out for different things. SEBI more from a investor protection and a security sort of mindset, and RBI is looking at it overall, protection of the financial market. Points, excellent points and very well made. And I'm going to just go back to Mr. Ranganayakulu to ask him one question, and before I go to the industry experts here, Mr. Ranganayakulu, do you think there is a scope for the industry to come up with a self-regulation model here? Apart from, it's not going to be a substitute to the regulatory oversight which is needed, but the concerns which you raised and the concerns which Mr. Sinha raised. What is the scope for a industry body, a self-regulation model to step up and build the necessary safeguards so that it builds more confidence for both the participants and of course to the regulators themselves?
Yeah, sir. First point is that SRO does not substitute the need for a statutory regulator. So these are actually voluntary organizations. These can't be compared with professional organizations like lawyers associations, bar association, etc. These are business entities. So they require, if they have to act as SRO, they require some vesting from the statute. And in any case, the principal regulator will be there to have the overall supervision. SRO can be entrusted with only certain tasks. And today, if you see the space, SRO, even AMFI in the space of mutual funds in India, it is an association of all the mutual funds, and it is yet to be vested with the statutory recognition and certain powers to take on. If you see the exchanges, stock exchanges, for example, by virtue of their bylaws, they have certain powers. They can discipline, they can take the disciplinary actions, etc. But when it comes to the overall statutory power is concerned and enforcement actions are required, then the principal regulator has to be there. So I agree that SRO concept to be developed so that the supervision and regulation is distributed between the two with the overall supervision with the principal regulator. That's a good idea to develop a SRO even in any space.
Thank you, Mr. Ranganayakulu. I mean, we clearly respect, the boundaries between, regulatory function and self-regulation. Yeah. But it just seems that, there are several aspects of the, product which can lend themselves, the concerns which we have on the product, which can lend to self-regulation, particularly on, anonymity, issues of KYC, etc. At one level, we can make a beginning there. But thank you very much for your input. Yeah. With that, I'm going to go to Mr. Sriram, right now. And Naveen, I will come to you next because I'm going to ask you to react to what all the regulators have told us. So Naveen, so maybe you can sort of, just think about that. And I'll go to Mr. Sriram first. Mr. Sriram, what is your take on the impact digital assets are going to have on the financial system? You've been a banker, career banker. And just a correction, Mr. Sriram was the managing director of SBI, as well as he retired as the managing director and CEO of IDBI Bank. So coming from that background, Mr. Sriram, what is the impact the digital assets are going to make in the financial system? Maybe you can start with that, Mr.
Sriram. Thank you, Viswanathan, and it's nice to be part of this panel. The impact of digitalization, as Mr. Anand Sinha has said, in terms of fintech, big tech, and all is for everybody to see in many ways. And then, as I said, as we know, the banking system is highly regulated, and in that context, there is very little flexibility in terms of trying to push through boundaries, which probably the fintechs and the big techs will be able to do. In some way, the difference between regulation and innovation is the one that always creates this problem, and in terms of which goes first. And when innovation actually by far becomes much faster than regulation, then you have this sort of a gap like a digital asset, cryptocurrencies, and so on. And regulations will try to figure out as to what is to be done. to my mind, there are a few points that I thought I'll sort of discuss. One is the biggest advantage of probably the sort of cryptos that we are talking of is its seamless cross-border transactions that could happen. Now that is something that is being talked of quite a lot. But also the biggest disadvantage comes from the fact that this seamless cross-border at the moment seems to be a little bit more shaky in terms of volatility and the underlying and so on and so forth. Otherwise, you won't find an El Salvador impact of 11 to 15% on a Bitcoin price. So this is what I guess a regulator will start to think and see, both in terms of customer protection and in terms of regulation of regulated bodies, how much of impact is it going to happen. The second point that I would like to say is that you have to distinguish between two important things that has happened. One is the cryptos themselves are by way of assets, and the other is the technology behind it. There's a lot of support for the technology in the sense that it has created substantial benefits for people who started to use that. And in many ways, including KYC, in security of documents, in land reforms records, in cross-border transactions, in trade finance, people have started to use the technology to support their existing operations in many ways. So once that technology comes in as a fundamental precursor to probably to sort of see as to what exactly is next, maybe that'll give a sort of a comfort to the banking system that we can go one step ahead. The two important points according to me. One is the comfort and confidence in using this crypto. How much is it with the regulators, with the banking system, and with the consumer at large? I'm not sure whether that confidence and comfort system has been addressed significantly. There is a demand from a certain section of population for this, but the product as such is still not very clear. Even today we are in this whole discussion thinking about whether it's a currency or an asset, and then down the line, I don't know how many people will know that value of your 1 lakh rupees will be 0.000 whatever a Bitcoin and so on and so forth. So consumer education, financial literacy, which has just started off the block, has to be substantially much higher. And the second part that I would like to highlight is the adoption. Now, one of the things that advantages that is sort of prescribed is the financial inclusion benefits by way of P2P lending, for example, since some of them don't get access to the formalized banking space. Now, so adoption of this on the P2P space will happen only when there is comfort on the technology. There are issues regarding true value of what sort of digital assets these are. Will it fall drastically? Will it rise drastically? There's a lack of information on the value, on the loss of value, if at all there is a loss of value. And if I do this P2P lending in some form, what would be my value over a period of time is something that has to be established. So there are, as I said, positives in terms of innovations that are giving us good learning and good adoption techniques. But there are different areas of risks, which my previous speakers have also said, which need to be addressed substantially before we can get some comfort in terms of trying to push this new innovation faster.
One more question for you, Mr. Sriram. You've been, sort of responsible for, very large players in the financial, institutions sort of in India. How do you see the, digital players and the digital financial sort of digital assets coming in? Do you see those players and those products as complementary to a conventional bank, or do you see them as, competitive to the conventional products which are already there? And what is the over a period of time, are you going to see more and more of these? And how do you see the transition? What is, you already made the point about financial literacy and digital education, etc. How do you see this transformation going on?
No, I don't see it either one of the two. It is both. In some way it is complementary. In some way it is competitional. So we need to exist with this sort of a situation and try and figure out our own strategies in terms of what our institution or what our banks would like to do in this current context. There are obvious issues in terms of when you are a regulated bank entity, there's a very clear onus of responsibility on you for KYC AML. And that is the biggest challenge that any of the banks today will face in terms of trying to figure out ways and means in terms of how do you sort of attack that. It's not only a question of who's doing it, but also doing of where is the source coming from. And many times when you transfer it onto cryptos, the trail becomes invisible in the sense that you don't have it's cross border, it's everything, and then what happens? You have no, it is not within the control of a particular bank or a system there. In many ways, I would still feel that a customer profit. No, I don't remember. I don't know whether you remember in 2008 we had this derivatives crisis purely because of the fact that people didn't understand what they were buying or what they were selling, and to some extent, the loss was stopped because the volume was not as high as it could have gone. And thereafter, the customer appropriateness and suitability was put in to make sure that certain of the instruments products that the banks sell will be based on the education awareness levels of the customers to whom it is sold. This is a different ball game altogether, because this is not a bank product. It's a product which the customer is actually buying off the shelf somewhere else. So it has got nothing to do by way of banks being in liability. But the biggest elephant in the room is the KYC AML. And unless, even I suppose the RBI would probably be insisting on extended due diligence on such accounts through which, transaction flows happen to various exchanges. Until such time that there is a cloak of comfort of this instrument as an asset, what are the checks and balances that need to be put into the system, it will always be a source of issue there. But the good practices, the innovations, the positives of cost reductions, the real-time settlements, all of these have been matter of play for have been learned by the system, and that is where it is complementary in the sense that we have today a 24-hour RTGS. Even the banking, even the RBI has gone into that sort of mode, and I'm sure that is all being driven by what the market is desiring, and that is where I suppose the interesting part comes in.
Thank you very much, Mr. Sriram. I think the takeaway for me is, regulations will always have to catch up with innovation, and you have to sort of take all proper safeguards before we can go, deeper into this, area. Now I'll go to Naveen now. Naveen, you heard Mr. Sinha, you heard Mr. Ranga, and Mr. Sriram. I would say both sharing caution and also being optimistic about a path forward. As someone who is part of this industry, what are your reactions to the views you heard on the panel now?
So, Viswanathan, before I go into a specific lecture, let me share some of the data and some of the information that I've been hearing over the last 1.5 days throughout the conference. And one particular anecdote, which came from a different webinar yesterday on a CBDC.
I think we have lost Naveen. Till we have him back, I'm tempted to ask another question.
No, we can hear him, Viswanathan.
Okay. Yeah, I can hear you back actually. Sir, could you hear me?
Yes.
Sinha, sir?
Yes.
Sir?
Yes,
Okay.
yes, I can hear.
Okay. So I was saying, sir, that yesterday there was another conference on CBDC where I myself plus Mr. Sambamurthy and Padmanabhan sir were discussing, and Mr. Sambamurthy shared a very interesting anecdote. He said that for all these innovations, he thinks ultimate user is the future user, which are millennials, and they are one of the largest number of users in the country. So he just was generally talking to them their views about, and this is not me, it's his words, so I'm using and borrowing. So he said he was just talking to a few of those that asking, do you know about CBDC? Do you know digital? What do you think? And he said their answer was very simple. For us in the world today, anything that's not digital is dumb. And he said, I could understand that these youngsters don't want to get into nitty-gritty. They understand that the world is moving digital and it's smart. and anything that enables them to continue to get things smarter, they want to adapt to it. That was his answer, and he said we have to keep this mind in whatever we are building for our country. And let's not forget these are going to be the core user and what they wanted at the pace. Now, linked to this, there was a session with two MPs from the parliament just before, I think an hour before our session. And there was an interesting data point that was shared that we already have in India close to 1.5 crore plus users. And if I'm not wrong, the retail investors in securities market are about close to 2 crores. So whether we like it or not, we're still debating the basic risk. And I don't think any industry player or any one of us are not mindful of it or we are ignorant of this. I think we all know there are risks. I don't think there has been any challenge in saying that we want to be get regulated. And yes, there has to be a PMLA, there has to be a KYC, yes, there has to be standards, there has to be FEMA related compliances and filings. I think the industry is ready to follow compliances and we have enough models and examples. I don't think anybody is saying that there is no risk. The debate has always been that we took so much of time and still taking time that whether we ban or regulate it. Where good part is that at least throughout the discussions, I heard everybody saying 2 or 3 things. One, everybody agrees it's not a currency. I think maybe that was a wrong-term use or a wrong aspiration from where the whole journey started. And I think eventually, very quickly, everybody understood that this is not really a currency. In fact, that word, the moment you add it, you actually took on entire regulation of the every government because the currency issuance is limited to government and the central bank. So that created an unnecessary legal conflict. If that wasn't there, if it was called crypto assets, I think it would have solved upfront, as we're all agreeing. So everyone agrees that probably it needs to be treated as asset. As Ranga sir said that within asset, yes, there are nuances and challenge, whether it is a security, whether it is a commodity. The reality is maybe it's neither. Maybe we can look at some of the common risk and find a new. So here the one of the challenges we've seen, sir, is that most of our early time regulations were silos basis on a specific product or a type of entity. The digital is changing this whole world order to becoming horizontals or converged business models. So today, if a Amazon starts with the selling books, today it doesn't just sell books, it does everything else, including financial services. So the moment you have to look at that kind of a business model in a digital era, you need also a regulation which is integrated and converged. That can happen only if you identify the nature of risk associated with the business activities and entities and regulate the risk, not probably the products or entities or businesses. So I think the limited point first I wanted to say is that, sir, we understand that there is a risk and I think we are open to regulate. The challenge has always been banning because we thought banning would probably take away the responsibility from some of the regulators and government saying that we are not responsible, it is illegal. Let the enforcement agency goes and get them. But we already know what happened with prohibition. We already know what happened with gambling. It actually creates more criminal activities. It actually creates more risk for our end users because they tend to lose money. You know, in gambling, in the matka, the smallest guy, he goes and plays something and he loses his money all the time. And there's no way to actually protect that kind of a customer. But if you have a regulation, in fact, there has been a common point which I heard that there is an anonymity. The reality is, sir, in digital world, there is no anonymity for anyone. It is only till an authority wants to go behind and find it out. And even during our early discussion, when the PPIs were coming in, we could very clearly establish that the physical paper currency transaction versus a digital, even without KYC, you have at least 20, 30 data information point, which could at least give you some information about something. Now, I'm not saying that's final or that's how it should be. I agree with the having full KYC, full PMLA compliance. In fact, the whole industry agrees. So the point I was trying to move forward is that one, we all agree that there cannot be a ban. There has to be identified digital asset, how it has to be regulated, whether it should be as a security or a commodity. I think it still needs a lot more discussion. Or do we need to create some new classification or addition and borrow from these existing rules, whatever is applied? Because one news item that came that it should be treated as a commodity, which maybe for a trading purposes work, but the moment you talk about issuance of these tokens, it will not work. The moment you talk about this getting used tomorrow in future for any other activities, which it will, then again it will not work. So how do we look at a comprehensive regulation across different regulators and identify risk and bring all of those together? Also, sir, we can't forget that in India, sir, there has been 2 or 3 waves of us creating growth and the value creation. It all started with what internet created and world over, not just India. And India all the more because we are, sir, more services economy. Our growth started with when the tech companies started becoming big, when the internet created a lot of other digital models, when the fintechs came in, the mobile created a lot of wealth for a lot of people, created access. We all talk about geo case studies, not just here, but globally. We also have examples of things like UPI as we opened innovation in the payments, how we became the masters of that. So everywhere we see, sir, our strength is all about people, talent, and technology. Anything that happens in that, we need to be masters and champions of that. If we ignore that, we actually are taking a huge risk of falling behind from other developed countries. And there is a natural aspiration for our country to become a digital superpower. And these are tools that we can't miss not to master, whether it's internet, whether it's mobile, whether it's crypto. And crypto is exactly creating that revolution. Good part is that our country has huge talent pool, huge knowledge, and we are the ones who have created world success in many of those aspects as an employee, as an investor, as a promoter, as a participant. How do we bring that in India? Why can't we create global businesses out of India? Because the beauty about these businesses is you don't need to be in a particular location. If regulation allows you, you could be present in Ahmedabad, you could present in Mumbai, and you could still do and manage the businesses world over and actually deliver at much lesser cost, which is very high cost today for others. And that growth opportunity we can't miss. We hear sometimes examples of China, sir, but we can't forget that the China can afford to do whatever they want because their strength in a trade is so big. And even if we see they have gone into CBDC, into wholesale, that too on a trade settlement, because they control so much of a trade. They have not looked at or talked yet about retail or a interbank settlement cryptos to be used. They understand where their strength lies. They are picking up an area and they're picking up a product which will put them and actually make them even strengthen. So if we have to be in our journey of growth, sir, we can't miss this. So I wanted to kind of say that we all need to work together to see that how we don't miss this opportunity. I don't think there is any new risk that we don't know today, other than the technology side, which I fully agree with you. That's where probably like Ranga sir and had said that we don't necessarily, and even I think Mr. Sinha had said that we don't necessarily need to go out and look outside. We have existing regulators, well-defined roles. Even if we divide the areas, let's say all the areas around trading, issuance of tokens could be looked at by SEBI, like it happens in a securities market. If there is a foreign related trading, probably FEMA comes in a play. They give a declaration for tracking what is happening. Are the LRS conditions meeting, not meeting? So again, that compliances can be again monitored. But when it comes to payments, which is very clearly a subject of RBI, they look at it and they kind of prescribe which of these can at all be used for payments and settlements or not. I don't think that anyway is an immediate of importance, but in eventually future somebody may have to look at it. As far as currency part, which is very clearly it could be only CBDC, their actually jurisdiction is already clear. It's very clearly RBI. So even I was also baffled that when I saw the same draft bill for a CBDC and private crypto, actually they needed to be separated out. To CBDC, there is a zero controversy, there is a zero debate that needs to be done. That is very clearly a RBI jurisdiction. They're already working ahead on that. So that could have been cleared immediately. While private could have been looked at more deeply and see that what could be done. And as we said, for some reason, we believe that the existing framework is not fitting in. Yeah, there is a model like IFSC we have in Gujarat. We can always have a IFSLRC kind of a committee creating another agency with support from all. But one point which Mr. Rai said yesterday that we cannot regulate these products which are largely technological driven without having appropriate knowledge and a people who understand those technologies very well. That aspect cannot be ignored. And probably that's where again we could look at a global examples of other regulations and how they have tackled that part and what we need to bring in. Rest, I think we already know. I think our country, both regulators have done amazingly well to create a very successful financial system, very stable, very robust, and I think very well managed. So I think we have enough learnings and wherewithal to do it, sir. We can't hear you, sir, Viswanath, sir.
You're on mute, Viswanathan.
Viswanathan, sir, we can't hear you.
You're on mute, Viswanathan.
Anu, do you want to go ahead by the time sir comes back? Maybe he has a connection issue. Viswanathan sir, can we ask Anu to go ahead if others are okay? Maybe just in the interest of time. I can't see him there. Sir, by the time I think maybe Sriram sir can take over by the time Viswanathan sir comes, and
No,
let's
I
utilize.
will just try and sort of read out one chat. Probably Naveen can answer that, I suppose, on that as well. I don't know. He says, "Dear sirs, could you please throw some light on insights on tokenization of businesses, communities, industries, and individuals alike? For example, if I'm a business owner and I want to tokenize my service or product, and the tokens are also tradable, would love to hear your thoughts about the tokenized economy and its future in India."
So, to be honest, a token is just a term in a technology way. Today, also, if you do anything about your company, any brand, any product that you create, there is nothing prevents you. This becomes one more extension of your product, your brand, and your service. It depends on the value of your brand and the value of your business and how your customer perceives you. That will drive the value. So, today, it doesn't stop you to create that till the time we have a very clear formal regulation. If you see by that, even RBI allows, even in a monetarily a closed loop, vouchers to be issued in a different form, which could be utilized just for a commerce or even otherwise like your loyalty cards, etc. So again, currently they will fall under those kind of a parameter. I don't think there is any challenge doing any of those currently in the current regulatory regime. Sivani, we have technical issue with Mr. Viswanathan and Anu. If you could quickly check with that. Sir, back to you.
Yeah. Should I read out one or two more comments? Is that all right?
I think so, sir. We should do a Q&A considering the time.
So there is another one which says the US Fed is a private institution that issues dollars not backed by gold or any asset. Decisions are made behind closed doors. Many cryptos, including Bitcoin, is issued based on open source code, and its value is determined by public participation. The Indian rupee is largely backed by dollars issued by a private institution. It would be great if citizens of free India are allowed to have a currency that is not backed by foreign private institutions. Sinha sir, would you like to take that?
I would say that the desire is very ambitious, not likely to be fulfilled.
So there is another one for Sinha sir, respected Deputy Governor. Bitcoin's computer code is the one who oversees issuances of Bitcoin. I think that is probably for information. That is about all. I think there are only some.
No, maybe I can add one or 2 points to that. Yes, it is generated by a computer code. So digital assets are peculiar assets which have come into being for the first time. They are created out of nothing. They are nobody's liability. So in that sense, they are very new. But the point is that as far as these digital assets are concerned, again, going back to the issue of why they can be treated as assets and not as currency, because for being a currency, you have to have a stable value, which they just can't have because they have no backing. And the second thing is any currency requires scaling up, which means just as Reserve Bank or any central bank expands or shrinks its balance sheet, that is controls the money supply to suit the needs of the economy. Now that is simply not possible in the world of cryptocurrencies. So it is a computer-generated thing, and that is where it remains. And therefore, it can't have the attributes of money, apart from the fact that it doesn't have stable value or more or less stable value.
One of the things, Ranga sir, is that in the sector of say forex, we have FedI for money markets, and derivatives. We have FIMDA. We have various sort of organizations that try and be a little bit more specialized and be a comfort or a support system between the regulator and the and the market participants, including in mutual funds, AMFI, and so on. So, is there a scope for something like this? With the industry participants who are there on the from on the crypto side, also being part of it, with market participants, with banks, and so on. A completely different thing, because it's a completely different. Many of us need to first understand and then take it forward from the perspective of the industry as well. And it's sort of something which is a work in progress at the moment. And I believe that would sort of very strongly help the system. What are your thoughts?
Yes, sir. I have already underlined the say SRO concept. So this is also either they voluntarily come forward and form an association and work together, and the other aspect is that that may not serve the purpose coming together, because they need some regulatory framework. So that is where the problem comes actually.
Sir, I would just add to it on the SRO part that at the BACC, one of the activities in absence of any clear guidance from the regulation, at least voluntary, all the, let's say, sincere and those who want to be compliant, those organizations have come together and started putting together a code of conduct. The version 1 is already in place. They're now working on a version 2, which is, let's say, based on at least global best practices and a global laws, what they say, whether it's KYC, PMLA. So saying that even if we start this debate, discussion, final draft bill comes, it gets implemented, the risk is every day. All the risks that you said, we are not saying that those risks don't exist. So why increase those risks? Why let that hamper what is getting discussed? Can we voluntarily take upon ourselves as an industry group, not as an individual industry member, but the whole group, which is where again appropriate experts are involved, who validates those, let's say, best practices, those rules, and then try and enforce it. The best enforcement we can do is that get a voluntary audit done on that and submit a certificate. So some of those things and publish ratings. This is, sir, in absence of that, and obviously once the regulation is there, we work with the regulators as per their mandate. Sorry, Sriram, sir. I just
No, thank you for your.
That's a good thing, sir. That's a good thing to start with. I think in the absence of any regulatory supervision and framework, I think something of your voluntary association and coming out with code of conduct, discipline, etc., is a very good thing for the investors who are actually investing today without any regulatory supervision.
Yeah. Fair enough. Do we have some
we
more
have
time?
back in case he wants to talk anything before we kind of, our time is also. Anu, can you hear us? We can't hear you.
Naveen, can you hear me?
Yes.
Yeah.
Finally. No, just a few points. I think in three parts. This is a topic where probably the horses have bolted. So much has been happening over the last few years. So anything which is not a hybrid model, which doesn't probably look at the industry as well as the regulations, and of course, this mitigate measures will put probably everybody in a bit of a difficult situation, because a lot of wealth will get locked up, right, in the asset class, in case an extreme, position is taken. So again,
you are lost.
Anu, we can't hear you.
We can't hear you. No.
Is this the connection between your earphone and the laptop? Something? I don't know if that was the problem also with Viswanathan, sir. Anu? Oh, it's gone. Sir, you're on mute. We can hear you now, sir.
Yeah, thank you. I think there has been a little bit of a disturbance on the quality of content and volume. But then I think we had a very interesting and good discussion on various matters relating to regulatory aspects of cryptos, and I'm sure the audience would have found it useful. Obviously, there are takeaways from every session, and I suppose there could be more questions and answers in many of these sessions as well. And one of the takeaways of this session has been the need for industry and regulators to come together, and even before a certain law comes into place, and try and build a sort of a system which is in the interest of all the risks that have been pointed out, in the interest of customer benefit and so on. So I thank all of you for having participated in this session. Mr. Anand Sinha, the former DG of RBI, Mr. Ranga, former ED and legal head of SEBI, Mr. Naveen Surya, chairman of the Fintech Convergence Council and advisory board members of the blockchain and crypto asset, and two partners from Cyril, Amarchand, Mr. Viswanathan and Mr. Tiwari for participating in this discussion, and look forward to meeting up once again. Thank you very much.
Thank you, sir. Thank you very much.
Thank you, Sriram ji, to you as well. Thanks for taking over and saving our day.
Thanks.
Thank you so much,
Thank you.
everyone, for such an engaging discussion.
Thank you.
Another thank you goes out to our attendees who are here with us today. Thank you, everyone. We'll be back in shortly for the next session. Stay tuned.
Okay. Thank you.